Nigeria has achieved a rare energy milestone as gas flaring fell to 7.16% in July 2025, even as daily gas production rose to 7.59 billion standard cubic feet per day. The simultaneous growth in output and decline in flaring underscores the Nigeria Upstream Petroleum Regulatory Commission's drive to boost production while advancing its 2030 zero flare commitment. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kikelomo Okere. According to the Nigerian Upstream Petroleum Regulatory Commission, Nigerian gas industry has sustained steady growth over the past 3 years, with the daily average production hitting 7.59 billion standard cubic feet per day in July 2025. This marks an 8.58% increase compared to the 6.99 billion standard cubic feet per day recorded in the full year of 2024. The 7.59 billion standard cubic feet daily average also represents a 9.84% increase from the 6.9 billion standard cubic feet posted in the full year of 2023, which shows a sustained rise in gas production. Despite an increase in production, the Commission also reported a continued reduction in the gas flaring, which fell to 7.16% in July 2025, down from 7.55% in 2024 and 7.38% in the corresponding period of 2023. The reduction in gas flare was recorded despite the steady increase in gas production, which reflects the Commission's commitment to end routine gas flaring by 2030. The Commission has embarked on gas reduction programs like the Nigerian Gas Flare Commercialization Program. Other initiatives include developing a decarbonization and sustainability blueprint, promoting carbon capture and storage, and integrating sustainability into project planning through the upstream petroleum decarbonization template. In terms of domestic gas delivery obligation performance, the sector delivered 72.5% in July 2025, up from 71.8% in June 2025. Data from the Commission further shows that the DGDO performance stood at 72.2% in January, rose to 73.5% in February, dipped slightly to 70.8% in March, before climbing again to 73.7% and 73.0% in April and May respectively. On gas production by contract type, 63% of output during the review period came from marginal sole risk, formerly marginal field, while production sharing contracts accounted for 24%, joint venture contract contributed 10%, and sole risk operators delivered the remaining 3%. Gas utilization data shows that year to date, as of July 2025, which is 35.88% of production, was channeled to export sales. 27.82% was supplied to the domestic market, while 29.13% was utilized for field and plant operation. Companies deployed gas mainly for in-house purpose such as fuel, gas, lifting and re-injection for pressure maintenance. Gas to power hit its strongest level in 3 months, with average daily deliveries rising by 3.48% month on month from 833.86 million standard cubic feet per day in June to 862.86 million standard cubic feet per day in July 2025, the highest in 3 months. Over the first 7 months of the year, gas to power supply stood at 780.23 million standard cubic feet per day in January, increased to 849.37 million standard cubic feet in February, and rose further to 886.83 million standard cubic feet and 886.7 million standard cubic feet per day in March and April, respectively. The daily average for May, June, and July were 837.64 million standard cubic feet, 833.86 million standard cubic feet, and 862.86 million standard cubic feet daily, respectively. The first Nigerian policy initiative of the federal government of Nigeria is expected to earn the country about 3 trillion naira in the short term if effectively implemented. The Minister of Trade for Industry, Trade and Investment, Senator John Enoch, stated this at a ministerial briefing on the forthcoming West African Industrialization, Manufacturing and Trade Summit and Exhibition 2025, which is scheduled to hold in Lagos in October. Eno expressed the government's determination and commitment to driving sustainable manufacturing sector growth by outlining strategies for national industrial policy implementation at the West Africa IMT in October 2025. The minister stated that the West Africa Industrialization Manufacturing Trade event is more than a gathering. It is a platform to accelerate Africa's march towards true industrialization. It says for too long, the progress of industries has been tied to export of raw materials. It says the time has come to unlock the full potential of industrial scales, the MSMEs, and harness abundant manufacturing resources. Union Bank of Nigeria, one of the nation's longest standing financial institutions, has announced the successful completion of its merger with Titan Trust Bank Limited following final approval from the Central Bank of Nigeria. This milestone, according to the statement from the bank's Chief Brand and Marketing Officer, Olufumilayo Aluko, concludes a process that began with the signing of a share sale agreement in 2021 and positioned Union Bank as an even stronger force with Nigerian financial service sector. Under the term of the merge, Union Bank has fully absorbed Titan Trust Bank operations and assets. The combined institution will continue to operate under the Union Bank brand, while the Titan Bank ceased to exist as a separate entity, with an expanded footprint of over 293 service centers and 937 ATM nationwide. Supported by strengthened digital channel, Union Bank is poised to deliver enhanced value across retail, SMEs, and corporate segments. The merger combines Union Bank's trusted heritage and Titan Trust agility and innovation, creating a platform for sustainable growth and a broader financial inclusion. Union Bank Managing Director and Chief Executive Officer Yetunde Oni described the development as a pivotal moment in the 108 years journey and a launch pad for delivering greater value for their customers. By blending stability with innovation, the bank is better positioned to meet the evolving needs of the Nigerian and to be fair most trusted financial partner. The bank assured customers that there will be no disruption to existing service. Account details remain unchanged and customers will continue to access a full suite of products and service seamlessly with an accelerated push towards enhanced digital solutions. This strategic consolidation strengthens Union Bank's market position, unlock operational synergies, and underscores its ambition to deliver a modern, robust, and inclusive banking experience for all. Governor of Central Bank of Nigeria, Olayemi Cardoso, says incentives should be targeted at manufacturers that are producing for export. He stated this at the 54th Annual General Meeting of the Manufacturer Association of Nigeria, Apapa branch, while charging manufacturers to lead effort by diversifying Nigerian foreign exchange earning. from crude oil dependence. Speaking on the theme, completing the oil sector as a major foreign earner, strategy for manufacturing to fill the gap, Cardoso, who was represented by Aliu Ashiru, Head Division, Trade and Exchange Department of CBN, stressed that manufacturing held significant potential to conserve forex, expand export with value-added products, create jobs at all levels, and enhance macroeconomic stability. He emphasized the need for a deliberate, coordinated, and long-term strategy to unlock the sector's full potentials and transform it into a major forex earner. He listed strategic pillar for growth, including policy alignment, investment in infrastructure and energy, access to finance and forex, value addition and backward integration. According to him, there is need for comprehensive industry policy prioritizing export-oriented manufacturing, noting that the policy must be stable, predictable, and aligned with trade, monetary, and fiscal framework. Incentives such as tax, holidays, duty waivers for machineries, exports rebates, and investment guarantees should target manufacturers producing for export markets. Nigeria must from exporting raw materials to value-added products. This requires deliberate investment in the backward integration, especially in agro-processing, petrochemical, and solid mineral. He assured that the Apex Bank will continue supporting the sector through proactive monetary policies and target financing interventions. In his remark, Chairman Manufacturing Association of Nigeria, Apapa Branch, Raphael Danilola, called on the federal government that the ongoing economic reform do not lead to destruction of businesses in the country. He stated that while the association remains supportive of the various reform measures put in place to reposition the economy, it is believed that the implementation of such reforms should be in a manner that will contribute to the continued survival existence, noting that the current economic downturn requires measures to help manufacturers stay in business, especially with competition from continental free trade zone, saying the ability to operate and compete in the regional market depend on government policies and action that shape the business environment and provide the necessary infrastructure. The association, however, called on the government, both at the state and federal level, to support the sector. Let's take a quick short break. We'll be right back. Don't worry, stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government's policies. Broadband penetration in Nigeria declined for the second consecutive month in July to 48.01% as the number of Nigerians having access to high-speed internet dropped. Earlier in June, broadband penetration had declined from 48.8% in May to 48.7%. This came despite a recent assurance by the Nigerian Communication Commission that the country was on the course to achieve 70% penetration by this year end as assets in the national broadband policy. 2020 to 2025. According to the data released by the NCC, the number of the broadband connection in Nigeria declined from 105.7 million in June to 104 million in July, aside from the overall 70% target at the end of 2025, which is said to be missed. The country has missed several other targets set in the broadband plan. Going by the timeline of the plan, broadband penetration in the country was expected to be at 50% at the end of 2023. However, at the end of the year, penetration stood at 43.71% and rose marginally to 44.43% at the end of 2024. Recognizing the high cost of smartphones as one of the access barriers to broadband in the country, the plan developed by key experts in the ICT industry appointed by the government recommends that the country should have at least one smartphone assembled planned by 2023. This was to ensure the price of an entry-level smartphone in the country should be as low as 18,000 naira. However, the country currently has no local smartphone assembly plant, while cost of smartphone in the country has skyrocketed as a result of naira devaluation. The cheapest smartphone in the country currently sell for more than 100,000 naira. According to the plan, part of the milestone to measure progress include the 70% of the telecom subscription should be 4G by 2023. However, NCC data shows that only 50.85% of the 169.3 million active subscription in the country were on 4G as of July 2025. The slow pace of movement in the implementation of the broadband is being blamed on several challenges inhibiting deployment of infrastructure. Specifically, high cost of right-of-ways charged by states is seen as one of the major bottlenecks, as operators are paying through their nose to states, with the exception 7 states that have waived the fee. The executive vice chairman of the NCC, Dr. Aminu Meiwada, emphasized that as recent telecom forum, noting that while the federal government is targeting 70% broadband penetration through the NBP 2020-2025, major obstacles to achieving the goals are coming from states. According to him, several states' regulations and policies are working against the plans and would need to be reviewed for the states to reap the benefit of the digital economy for broadband penetration, describing broadband connectivity as a catalyst for economic growth, driving the digital economy, creating job opportunity, and fostering entrepreneurship. Meiwada says broadband connectivity will bridge the digital divide and make digital tools accessible to all citizens. Recall that as of March 2020, when the National Broadband Plan was launched, Nigeria broadband penetration stood at 39.85%, with some at 75.4 million Nigeria connected to broadband service. This shows that Nigeria has not really made much progress with the implementation and result in the last 4 years. However, Nigeria is seeing steady growth in data consumption despite the slow pace of broadband penetration. Data consumption in the country hits all-time high of 1.1 million terabytes in July 2025. Profits taking has continued to trade the stock market, but the investors gain month on month in August 2025 by 0.3%, following the positive sentiment that sustained the market for most part of the month. Month-to-month analysis that the Nigerian Exchange Limited All Share Index, a major performance indicator of the market, closed at 140,229.50 points at the end of the trading on Friday, August 29, 2025, from 139,863.52 points. It opened in the first trading day of the month under review. In the same manner, another market gauge, market capitalization, which represents the total value of equity listed on the NGX, gained 345 billion naira to close at 88.769 trillion naira from 88.425 trillion naira in July 2025. Meanwhile, analysis for the weekly performance shows that the bear continued to dominate in the Nigerian stock market, as sell-off in Zenith Bank, which is by minus 5.7%, followed by WAPCO dropping at minus 3.4%, Guaranty Trust Bank minus 2.1%, ETI minus 6.8%, caused by a 0.5% week-on-week decline in the NGX All Share Index to close at 140,228.90 points. On market activities, trading volume and value declined by 33.0% week-on-week and 20.5% week-on-week respectively. From a sectoral standpoint, there were decline across the sector. The banking index dropped by minus 1.2%, insurance index minus 1.0%, consumer goods minus 0.9%, industrial goods index minus 0.4%, and oil and gas index minus 0.2% affected the overall market performance of the market. Reacting on the development, analysts from Cadros Capital stated that in the near term, the absence of clear catalyst is likely to keep sentiment cautious, with selective interest concentrated in fundamental strong equity. Over medium-term, sentiment will likely be shaped by macroeconomic development, including growth, inflation, and policy direction, as well as movement in fixed income yields, which could further influence asset reallocation decisions between equity and debt instruments. For analysts at Invest Data Consulting Limited, they stated that in their outlook that the market continues to grapple with profit-taking pressure, particularly in large cap and blue chip stock, amid weak sentiment and reducing buying interest. The improving volume suggests active rotation among counter, but the dominance of seller points to a near-term caution. Looking ahead, interim dividend season and corporate earnings remain key catalysts. Oil price volatility and global risk sentiment will continue to influence investor appetite in emerging markets like Nigeria. Before we call it a wrap, let's take a look at the Naira. The Nigerian currency traded below 1,515 naira to a dollar range at the black market at the first trading session in September, while the dollar index started the new month on a negative note. The Naira ended August on a bullish trend in the Nigerian foreign exchange market, closing at 1,531 naira to a dollar. Nigerian inflow of foreign currency increased due to higher remittance and foreign portfolio investment. Nigeria external reserve grew by $1.72 billion to $41.3 billion, giving the CBN some capacity to defend the local currency. Alright, this is where we call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms at Global TV NG. Till I come your way again, I am Kike Lomo Okiri. I celebrate you all.